Hey guys, welcome back to a brand new video on the FX trading. So recently I was on a trip to Dubai, and the style of trading that I was using in Dubai is day trading. Most of you guys will be asking, what is day trading? Day trading is a style of trading where you're only targeting 20 to 60 pips per day, and you have to make sure by the end of the day you trade close. That is day trading. So in today's video, I'm going to be showing you my day trading secrets and strategy that you can apply to your trading system and also be able to make money on a daily basis. So traders, if you're new around here, make sure to subscribe and let's get started with this video. First things first, guys, you need to use a registered broker. The broker that I'm using is FXView. FXView has fast deposits, fast withdrawals, low commissions, low spreads, and also they're regulated in 4 countries to make sure that your money is safe, guys. So let's jump into the video. This strategy, it's a concept that falls under price action, but for us to understand it, you need to look at the daily time frame like this, traders. So when you come to the daily time frame, you need to master all these candlesticks, how they are moving. Most of these candlesticks are either shooting up in an upward way like this, as you can see, or coming in a downtrend form like this, you can see. So when you're a day trader, you need to look at smaller time frames more than looking at higher time frames, because remember, you're looking for 70 pips, you're looking for 50 pips from the forex market. So my type of strategy is very simple, guys. The first thing you're going to always do, identify the daily candle, the previous daily candle. So right now you can see I'm on the daily time frame. So what I'm going to do is I'm going to zoom in as much as I can. This is my previous candle from yesterday. Today is a Sunday, so this was the last candle for Thursday, and this is Friday right here. This candle here was Friday and this is Thursday. Now I'm doing this more of like a back testing of the trade that I took on Friday. This was Euro NZ trade. So guys, watch me. Now what I do most of the time, I'm just going to mark out the wicks just like this. As simple as that, just like this. So the reason why I'm marking out the wicks, every candle that you see up here, traders, this candle either has a high and a low. A high and a low. Now, what does this tell me? The new candle that is going to open, it's going to try and break the high, which is up here, or the low of this candle right here, this low right here. You understand? So now for me, there are certain things that I'm always going to look out for, you know, when I'm trading this type of strategies. But the first thing is you have to mark out the high, which is here, of the previous candle, and the low of this candle right here, so that when this new candle opens, it's either going to try and break this or break this upper line right here. So when you're done marking it out, we zoom onto the 4-hour time frame. Now before even we zoom into the 4-hour time frame, traders, I want you to look at this. When this market opened, so most of you guys have heard about fake outs, but you don't know how to trade fake outs. Now there are certain key things that I look out when I'm trading this strategy, but one of the things is a fake out. So you can see when this market opened, this new candle right here, it opened and tried pushing down, as you can see right here, traders. It pushed down with much momentum, but after, when it reached time of closing, it went back and closed above this low right here. You can see, traders. So meaning on our 4-hour candle, you're going to see 2 candles, one candle push down and the other candle pull back and close from upside. That is one of the things that I always look out for when I'm trading the forex market. So let's zoom into the 4-hour candle. I show you that. So traders, this is my 4-hour candle. You can see clearly when I mark out the high and low of the previous day. So you can see this was Thursday that I marked out. You can see its high, which was this part right here, and its low, which was this part right here. Now you can clearly see when this new candle opened, that was Friday. You can see price tried pushing down to try and break this zone right here. In my previous videos, guys, I've told you, anytime when you see price try to break a support or resistance, now in this case, this is a support level. So you can see price tries to break the support level, but the other candle opens and goes back and closes from inside, meaning that is a fake out on the daily time frame, just like what we saw. So my main other thing, I'm just going to be looking out for something very simple. I'm just going to wait for this candle here to properly close inside, and then wait for this other candle to try and retrace a small portion of this candle here, because again, this big candle right here, this is again more of an impulsive move. If you zoom into the smaller time frame, which I'm going to be showing you, as you can see, traders. So I'm first going to explain one thing before I show you the confirmations that I always look out for when I'm trading this. So there are 2 key things that I always look out for, traders. Anytime when I see price give me this momentum like this, let's say the previous candle was a momentum candle like this, the times where price is going to open and just retrace a small percentage of this big move and then shoot back down. But the times where price is going to try and fake out like this, or the times when price is just going to come back up here and try to break the upper part, probably break and retest it, or you also just give us a fake out and then price comes back down. So there are very many ways, but again, we are doing all this, but we're also taking note of the timing when everything is happening. So as you can see now, we have to zoom into the smaller time frame, which is the 1 hour time frame, so we can have confirmation and where did I take my entry really. So traders, this is now my 1 hour time frame. So you can see clearly, I don't have so many indicators on my chart. I just have a simple things, and this is what I'm showing you traders. So now on my 1 hour time frame, what you are seeing, this is now the impulsive move that you see as a one big candle right here. You can see this right here. So now for us, what we wanted price to retrace a small percentage of this, but again, sometimes you already know where price is going to come towards to retrace. You don't need sometimes to even use the Fibonacci retracement. So as you can see traders, when you look at your further left of the screen, you can see price had given us this support zone, which is more of a supply and demand zone. So let's draw it out just like this. As you can see, since it's a consolidation, I told you anytime when you see consolidation in the forex market, we have to mark it out, because most of the times price will come back and retest off that same zone. You can see the same thing we had. Price came, broke it, as you can see with momentum, retested it, and then shot back to the upper side. Now most of you guys will be asking, how do I take my trade? How do I take my trade? Now most of the times when I'm day trading, I'm not using limit orders. I zoom into my 15 years time frame. So traders, now on my 15 years time frame, I like to look out for candlestick patterns that show me reversal. Now you can clearly see that when price was at this zone right here, you can see, which is our major zone, supply and demand zone. You can see price when it closed up here with this candle right here. So this one candle is a spinning top, and this other candle is an engulfing candle. As you can see, it's a big momentum candle. So making these two candles an engulfing candle, which is a bullish engulfing candle. So I took my trade exactly when price started opening up with this other candle right here. Obviously, I knew where price was going to go. Reason why, when you zoom back to the 1 hour time frame, just like these traders. So most of you guys need to understand timing is also very key. When you're trading the forex market, timing is very key. So when you look at this candle right here, so this is the 3 p.m. candle, and this was the 4 p.m. candle, as you can see. So the time when I took this trade, I knew it that momentum had to just jump into the forex market again. That was a Friday I'm talking about. So when this candle here, you can see here, we had really less momentum. As you can see, we had less momentum on these 3 candles right here. Again, you see, because again, this was more of the when the London session opened, this is the momentum you can see. But when price came back here, as you can see traders, it was the time when the New York session was opening, you can see. So for me, I took the trade when the New York session opened, but a little bit above here, right here. So I was able to take out more than 50 pips, only risking 15 pips traders. So let me draw it out for you so that you can see. So now this is I took my trade exactly there. As you can see, currently price moved up more than 70 pips, but my target, I put it up here. But again, I closed off some partial profits so that, you can take some money home since it's day trading, So again, I put my stop loss just above here, exactly there. As you can see traders, risking only 15 pips, and my target was more than 50 pips, but again, I took out 50 pips because again, you can even see where price reached at the 70 pips level. It started consolidating again, as you can see. But again, this strategy is very easy in a way that you have to look out for just a few things. You just have to look out for a few patterns, traders. You have to start from the daily time frame to the 15-year time frame just to confirm your trades, as you can see. You can see I had a very beautiful push to the upper side, guys. Whenever you're trading the forex market, guys, one of the things that you have to focus more on is the risk to reward. When you understand the risk to reward, the times where the trades that you can even risk only 10 pips and price won't go really take you out in any way, as long as you understand the type of strategy that you're using, the time when you have to trade it, that is all what matters, traders. So every time when I'm trading this type of concept, I have to consider the timing. I have to consider when the New York session is opening, and I need to understand if the New York session is really going to pump price in my way or not, traders. So this is a strategy for you guys. Make sure to go and back test it. This is more of support and resistance, but again, you have to, it's more of like advanced, It looks like basic, but again, it's more of advanced. Reason why traders neglect this. Traders love to go for the hard things and neglect these simple things, traders. Remember, before you start earning, you need to learn. So if you have not learned trading, you shouldn't think about earning because the market will eat your money, traders. As you can see, the 4-hour time frame was very, very clear, traders. As you can see, very clear, traders. As you can see. And that is a day trading strategy that you can apply to your trading system and be profitable. If you have enjoyed this video, make sure to subscribe and I'll see you in my next. Peace.